The top 7 currency pairs in Forex trading, often referred to as the major pairs, dominate global trading volume because they combine the world's most powerful and liquid economies, offering traders the tightest spreads, highest liquidity, and the most consistent opportunities for speculation and hedging. At the top of the list is the EUR-USD, the euro against the US dollar, which accounts for the largest portion of Forex volume due to the economic weight of the European Union and the United States. It is favored by both beginners and professionals for its stability, predictable price action, and low trading costs. Next comes the USD-JPY, pairing the US dollar with the Japanese yen, highly popular for its role as a safe haven currency, making it sensitive to global risk sentiment and interest rate differentials, with traders closely following Bank of Japan policies alongside the US Federal Reserve. The GBP-USD, commonly known as cable, comes third, linking the British pound to the US dollar, and is well known for its volatility and sharp price movements, reflecting both the UK's economic data and broader global trends, making it a favourite for traders who prefer more dynamic markets. Fourth on the list is USD-CHF, pairing the US dollar with the Swiss franc, where the franc is considered another traditional safe haven currency. This pair tends to move inversely with risk assets, offering traders diversification and hedging opportunities, especially during times of geopolitical uncertainty. Fifth is AUD-USD, the Australian dollar versus the US dollar, heavily influenced by commodity prices such as iron ore, gold, and coal, as Australia is a resource-rich country. This pair also reflects global risk appetite and demand from China, Australia's largest trading partner. Sixth, the USD-CAD, pairing the US dollar with the Canadian dollar, is often nicknamed the loonie, and its movements are closely tied to crude oil prices, since Canada is one of the largest oil exporters. Traders follow energy markets, Bank of Canada policy, and US economic conditions to anticipate moves. Finally, the NZD-USD, the New Zealand dollar against the US dollar, rounds out the top 7, often seen as a commodity currency like the AUD, with its value tied to agricultural exports such as dairy, meat, and wool, while also being influenced by global risk sentiment and demand from Asian economies. Together, these 7 pairs form the foundation of Forex trading, offering traders different characteristics: the EUR-USD with its stability and liquidity, the USD-JPY and USD-CHF as safe haven indicators, the GBP-USD with its volatility, and the AUD-USD, USD-CAD, and NZD-USD as commodity-driven pairs, giving traders exposure to both developed economies and global trade flows. What makes them so critical in Forex markets is not just their liquidity, which ensures minimal slippage and faster execution, but also their responsiveness to macroeconomic data, interest rate decisions, and global events, which ensures frequent trading opportunities. Because they are heavily traded, these pairs generally come with the lowest transaction costs, making them highly attractive for day traders, swing traders, and even long-term investors. By focusing on these 7 pairs, traders can build a diversified yet manageable portfolio that reflects global economic health, energy demand, commodity cycles, and investor sentiment, while also providing clear avenues for technical and fundamental analysis. Whether a trader is looking for the steady flow of EUR-USD, the volatility of GBP-USD, the risk-sensitive behavior of USD-JPY, or the commodity-driven dynamics of AUD-USD and USD-CAD, the top 7 currency pairs represent the most efficient and effective entry point into the complex yet rewarding world of Forex trading, serving as the cornerstone of strategies employed by both beginners and seasoned professionals alike.